Market's in a bit of a seesaw right now. I'm looking at Google Finance. Dow's hovering at around 8,800s, 8790. It is June. Oh, come on. Where's my date? Is it not going to tell me? It is June 11th, 2009, just for posterity's sake. The reason I'm recording this is market's been hovering around this area for a while. Gradual uptick, which is very encouraging. But what concerns me, and I reiterated this in a past video, but the resolution was too high and I couldn't get it uploaded. A lot of this seems to me to be a natural market correction, meaning there was a bear market that has really delineated stocks, but now they're undervalued. And of course, I mean, that money's coming back. Stock values have been improving generally over the past couple of months, quite a bit too. Currency's taking a hit in this just because that's just a natural thing. When you have risk flowing from safe havens such as the dollar, such as currency, I mean, people want to get into stock, which is more risk, more potential for profit. It's going to naturally affect the dollar. My biggest concern right now is, of course, about this economic stimulus, the fiscal policy as outlined by Barack Obama. I've been a liberal my whole life. I've always held on to liberal ideology, but now my view of liberal fiscal policy, it's coming under attack in a lot of different directions. Because I gotta say, I know that at this date, June 11th, most of that stimulus money has not been paid out, and yet the stock market is making gradual ticks towards recovery. Now, a lot of people are going to argue that the stock market doesn't have anything to do with the actual, economic recovery. I'm going to argue it does. I mean, there's money out there. The money's flowing again. And jobs are down. But job losses are down. I mean, we're still losing jobs at an incredible rate, but not as fast as we were. And the fact that this is happening without stimulus money filtering into the system, that doesn't bode well. Conservatives will argue that the economy is a natural force that will correct itself. And unfortunately, that seems to be the case right now. And in fact, it seems to me that the most effective part of the stimulus, the most effective form of government intervention so far, has been the bailout. And that's not going to make me very popular, but if anything stymied the economy's crash, it would be that those big institutions were bolstered. If you'll remember, when Lehman Brothers failed, that caused a catastrophic chain reaction. And that chain reaction is basically what kept digging the hole. Now things appear to be getting better because these companies have been allowed to regroup. What do you guys think? I mean, you can't attribute any of this recovery to the stimulus because it's just not being paid out. The bailouts, however, are substantial. That's happened. I mean, we hate the bailouts because we're basically doing a big favor to the big executives, but things do seem to be getting better at the moment anyway. At any time, the bottom could fall out of us with the currency market, and things could get a heck of a lot worse. I guess we'll just have to keep watching it. Let's hope for the best.